if it tries to follow these policies that are stagflationary, interest rates are going to be much higher, bond yields are going to be higher, the Fed will have to raise rates rather than cutting them, the stock market is going to correct. He cares about the bond market, he cares about the stock market, and therefore market discipline as opposed to political discipline. There is no political discipline because it controls the executive, the Supreme Court, the judges, the Congress. So the only discipline can come is bond vigilantes and markets telling him that some of his policies are not going to be sustainable. That's going to be the main constraint to not to follow silly policies.
So briefly, can I just confirm that if Trump was to fulfill his economic policy platform to the letter, that you would expect to see stagflation?
Yeah, especially the parts of the economic program that are stagflationary. As I pointed out,
there's 60% tariffs.
Exactly, or restriction to migration or runaway budget deficit. Of course, other parts of his program may increase economic growth, like being pro-business, low taxes, deregulation. But the other ones will be stagflationary.
But you say that sense may prevail and that he may implement changes in a more orderly fashion, creating less volatility.
Yes. First, his choice of the main economic advisors, starting with the Secretary of Treasury, may be important. Two, if he's aware, because his advisors are telling him that those risky policies are going to be punished with the stock market going down and bond yields going higher, those threats of market discipline may lead him to not follow those policies in the first place.
But do you hold concerns about those appointments that have already been announced? For instance, today we have learned that a television host from Fox and Friends is to become the Secretary of Defence.
Yes, some of those choices seem sensible. Like Mark Rubio as Secretary of State is certainly his expertise on foreign policy, even if he's a bit of a hawk on China. But other ones, like the recent choice of the head of the Pentagon, seem to be given to somebody who is not really a military expert. He has military experience, but he doesn't have the seniority to run a huge organization like the Department of Defense. And it's also possible that the Senate may not confirm those appointments that are actually not serious and valuable.
In the event of stagflation, what would that mean for global interest rates and interest rates in an open economy such as Australia's?
Well, if US were to follow policies that increase inflation, reduce economic growth, interest rates will be higher in the United States, both short-term interest rates because the Federal Reserve will have to raise rates rather than cutting them, and bond yields are going to be higher because there's more inflation, and real rates are higher because the deficits are unsustainable. That's dangerous for the rest of the world because high interest rates in the world imply that other countries have to follow the US. If they don't follow the US, their currency weakens. So interest rates globally are going to be higher, and that's going to crowd out growth globally. Of course, tariff in the US cause inflation in the US, but cause economic damage like less demand for the exports of other countries, and that's deflationary and leads to less economic growth for the rest of the world as well.
Do you expect Australians will have to wait longer for interest rate cuts as a result of Trump gaining the keys to the White House once again?
It depends. If we were to impose tariffs that reduce economic growth and inflation in Australia, those tax cuts may be coming sooner. But if instead this policy lead to higher global interest rates, and then those interest rates go higher in Australia, then you'll have further crowding out of economic growth. I would say that most of the challenge of Australia are domestic. Growth is weak, but inflation is sticky, because probably the China shock implies lower growth, but most of the growth now is deriving from demand coming from the public sector, and that's leading to inflation to remain higher than otherwise. So you need to do economic reform that lead to greater productivity in the private sector rather than relying on the public sector in order to have a strong economic growth.
Australia's Prime Minister today has suggested that there is a role for Australia to mediate between the United States and China. Do you think that's feasible?
Well, I would say that it will make sense to try to find some degree of managed strategic competition between US and China. You're not going to get full cooperation, but full confrontation will be damaging to the entire world, not just to US and China and to Australia. Australia is in a position where the economic links with China are still quite strong and they remain strong, but also from a geopolitical point of view, is of course a friend and ally of the United States. Your former Prime Minister Kevin Rudd has been ambassador in Washington. He's been trying to educate the US political system on how to deal with China in a way that deters China but doesn't lead to greater confrontation. So I think that some of the expertise of Australia in understanding China could be useful to try to find a bridge between US and China.
Nouriel Roubini, terrific to have you on the program. Thank you.
Great being with you today. Thanks.